Hey guys, looking at entering in again on Zoom and adding to my position. It's going along quite nicely here. We can see here's my upper strikes, here's my lower strikes. It was going up, pulling back a little bit just from here. Alright, so I'm still really comfortable with this, and there's some good premium and everything in there still, so let's have a look. So volatility, yep, our volatility is 68, so that's good. We want our volatility. One of the things I look for is my volatility being over 50. I prefer that. I'm in an Uber trade at the moment, but look how terrible the volatility is on that. That's another story for another time. But high volatility for this strategy, yep. So let's go to our trade, and we will start at June 5. Okay, and we're looking at the 190s and 195s. So 190. Oh, what am I doing? There's a shortcut, easier way than that. Let me show you something here. I'll delete that off. Actually, I'll just clear it here. Just go up here to our Iron Condors. Click on Go. Okay, so we can see I'm already in this position. That's why it's working. The reason why this position is working is because I've been filled on that position, and I've placed my order to get out of that trade at 50% of my max profit. So I'm just going to drag these two down, nice and easy. Okay, drag down to our 190 and 195s. Now we're going to push this up. Okay, if you're new at this, yes, I understand this does your head in, because an options chain goes the opposite way to what logic would think. We're pushing up, but the price is down. So I want to go to the 130s, 125s. There it is. Okay, I've got a couple of little positions down here too. I've got a little bull put spread all the way down there that's just sitting there on its own, and I've got the 130s, 125s. So here's a little thing that I do, guys. If I put this over on here, put my paper up, just get in the habit of doing this. All right, all you need is this bit here. So we've got Zoom at $18. I don't think so. 167.93. Okay, and we're looking at June 5. Okay, we can see up here June 5 expiration, and it's going to return. We got here the mid is 167. Okay, so 167, which is $167 per contract. So which which expiration do we do? I get asked that all the time. Hey Rob, you got any picks for tonight? What's going on? What expiration do you think? Well, I don't want to tell you what it is. I want to show you what I do, and I want you to be able to get into my head, and then you'll be able to find trades yourself as well, right? Because if some nights I'm not available and you want to go enter into some other trades, right? I want to be able to empower you to be able to do this yourself as well, and not just be reliant on me. So what expiration month? Well, let's check this out, or what expiration date I should say. There's June 5. Okay, now we go out to the next month. Move this out the way. The way to move to the next month, down the bottom here, time, expirations, right, +1. We can see here is June 12. Okay, let me bring my notepad back over again. Over to here, and June 12 is 180. So that's 180. Okay, now we're going to go to the next one, June 19. Let's see June 19 up here, and let's put this in as 215. Okay, no, I didn't do May's. I didn't do May 28. All right, I want to give a little bit more time with that to be able to get better premium in there, and we've got to give it time to work. You never do Iron Condors when it's really close to an expiration. So, you know, June the 5th, that's well and truly close enough. It's a couple of weeks away still yet. Okay, gives us a bit of time. But we're not in this for the whole trade. Even if we did the June 19s as an example, we're not going to be in this trade until June 19th. Well, we hope we're not, because we're going to get out at 50% of our max profit. Well, I am anyway. If I say we, it means I. So what are we going to do here, guys? We've got 167, 180 or 215. So let's look at our ROI here. So maximum loss is 300. Okay, so, and it's just dropped just to make this right. It's going to jump all over the price. See the price now? 205 was 215, 295. So this is going to give you an approximate. So let me just change that quickly now. 205 and 295. So even if it changes right now, I'm going to leave it as that. Okay, so our ROI on that is, bring up my trusting calculator, 2.05 divided by 205 divided by 295 equals 69%. Okay, do you see why I'm doing this trade again now and adding positions on it? Right, I got a better return last Friday when I entered into this. I tried to get in again yesterday, but I wasn't filled. I was a little bit greedy on it yesterday, but anyway, so 69%, pretty happy with that. So when we get our 50% of our max profit, that would give us, so 70, 35% return. Not too bad for a couple of weeks. So that's on there. Let's now go to the June 12s. Go back to that, down the bottom. So we'll just quickly adjust the price on this. 183. It's gone up a bit. 183, 317. Oops, where's my... Let my notepad go again. Okay, calculator. What do we have? 183, 183 divided by 317, 57. 57%, and we had here 69%. Okay, now we go to June 5. June 5, we've got 170. Gone up a little bit. So this is why you don't have to get stressed with these trades, guys. If I show you something that I'm doing and you see it on Telegram, you don't have to rush and try to do it so quick. This is great for people that trade after hours, like people in Australia as an example. They're in better sleep now when the market's open. So they can trade after hours. The trade gets filled the next morning when the market opens. This is all about stress-free trading, supposedly. So we don't have to be glued to our computer all day long. So our loss here is going to be 330. Maximum loss, 330. Calculator again. 170 divided by 330 equals... I'd rather do all this in front of you guys instead of having it just all worked out and just go and put the figures in there and tell you this is that percent, that's the other percent, and so on. Because the more you go backwards and forwards and start playing with these figures, right, the quicker it is that you'll actually get used to being able to do this, and then you'll be able to see what suits you the best. So look at this. We've got 51%, 57%, or 69%. So in 1 week difference here, we've got 6%. Now 1 week difference here, we've got 12%. Okay, so I'm actually going to go to the June 19s. I like being that far out. If there's an abnormality, like in a recording I did for you last week, we showed that I think the June 5 had a higher premium than what the June 19 did, or something like that it was. So we're just looking to see what each opportunity brings us, and it changes changes all the time. So you might look at that, and if they were flipped the other way around, you might have got 69% for June 5 compared with 51 for June 19. Well, then it's a no-brainer which one you would do. So I'm comfortable with June 19 at 205. So let me go back to that now. June 19, and now it's 220 there now. Okay, so that's even nicer. A little bit more if we get filled at it, because there's no guarantee you get filled at that. So I place my order in, and if after an hour or two I haven't been filled, I look at what the price is, and if I'm really keen to get into it, I'll lower the price to be able to make sure I do get filled. Because at 220, all right, 220 and 280, let's work that out. 220 divided by 280. 78% return. Okay, so not three bad. So review it. Yep, and I want to put that in. I've got a couple of different accounts, guys, so I'm just going to look which one. Yep, in that account there, and bam, it's working up the top. Okay, so hope you've learnt something from this. If you've got any questions at all, don't hesitate to put it into the Telegram chat.